we did see slower growth, higher inflation, basically higher GDP price deflator. I think took some of the steam out from the Q2 GDPs, and we did see the growth momentum slow down more noticeably towards the end of Q2. Although manufacturing still holding a bit on, but the momentum in manufacturing, if we are looking at forward orders, seems to suggest that things will slow down much more. But I think the key thing really was the higher inflation. As a result, we've seen higher price deflator, and I think GDP, given the external headwinds, I think will likely show more modest growth up from the versus in Q2, not Q2, second half of the year versus Q1. But if inflation still stays stubbornly high, I think the next two print on CPI will be very important. If we indeed see inflation picking out both headline and core in the current quarter, I think MAS can be a little more kinder in terms of just, I think, mainly tapping the brakes in the October meeting, or the scheduled one. And that could be just a mild steepening of the slope, bearing in mind that inflation is still elevated despite the higher base of last year, and the pass-through effect of still of higher prices, higher cost of goods, and importantly, the tight labor market condition, I think still support inflation and inflation expectation. So perhaps the MAS still has a little bit more room to go. Much will really depends on, I suppose, external event, to what extent the growth momentum were to slow down more noticeably or just slightly.
Mr. Song, this is JP Ong. I want to ask you about the reopening here in Singapore, which was really heralded in the first half as being the big driver for that very impressive economic recovery. But as we've seen, Changi is pretty much operational for the most part. We've seen a lot of reopenings from establishments to retail as well. Has the reopening play perhaps run out of a bit of steam, and perhaps is one of the reasons why Singapore might be seeing this economic recovery starting to stall just a little bit?
It's not yet. Services side, especially those who had seen more significant restriction in place until more recently. And if we are talking about Changi Airport, yes, more planes are flying, landing and takeoff, and more footfall in our neighborhood, Chinatown, etc., and more events being held, whether it is F&B, whether it's professional events, or whether it's gaming events, or even concert. So I think all these things still add to some of the momentum for these industries, by and large, within the domestic facing one. Those external facing services, manufacturing, may be more challenging for them. But even within the goods producing sector, industries like construction are still getting workers finally, more of them, and activities are picking up. So it's being balanced out. But I think for real GDP, the biggest challenge really is GDP price deflator, because that will take a lot out from the nominal growth that we are seeing happening on the ground.